The buying and selling of products online is not only shaking up the retail market, it is driving huge change in logistics as well. Thanks to the sector's dynamic growth over the last couple of years, the weight of capital that is targeting logistics and industrial assets has increased substantially. We project that we will see this year, for the first time ever, investments exceed 20 billion euros of investments. And the e-commerce boom that has set in motion a discussion about a new asset class distinctive from traditional facilities has certainly been the main engine behind this growth in investment. Now, to give you an idea how the future logistics real estate market look like, and what are the potential opportunities and also the challenges for developers and investors, I'd like to focus on 5 key points. Well, the first one is the unstoppable shift towards an everywhere consumption. And there's actually something very important in here. The changes that we are seeing at this moment are not about e-commerce alone. They are about a seamless customer experience. As a result, supply chain complexity is increasing substantially. Today, the delivery of an item can involve several different types of warehouses and require a very complex last-mile delivery management. To remain competitive, retailers will need an efficient logistics system that can support increasing transport volumes and guarantee the right product is delivered in perfect conditions to the right place at the right time. And this brings me to my second point. Major occupiers of logistics facilities across Europe, when asked in a JLL survey, told us that they will continue to require a mix of buildings to support their operational needs. As you can see in this slide, future space requirements will be fairly evenly split across the whole range of different size categories. The different building types that will be required include large e-fulfillment centers, logistics depots, parcel hubs, sortation centers and delivery centers, and return processing centers, each with their distinctive location characteristics. Also, the functionality of these facilities is evolving. The building types are not really new. With the exception of mega e-fulfillment centers, so large facilities, single-unit facilities, over 50,000 square meters of space, that have emerged on the market more notably only with the onset of e-commerce. Now, it would be wrong to say that such buildings did not exist prior to 2009. They did, but they were few and far in between. They were usually unoccupied because there was no real market for such a product. This has changed, and since the start of 2009, roughly 6.5 million square meters of megasheds were built across Europe, and another roughly 1.1 million square meters are currently under construction. Investors are getting more familiar and therefore also more comfortable with the key features of these building types, but issues such as lot size, location, and letting risk still raise concerns about liquidity. Now, there is an important aspect that should help actually reduce these concerns, and this is the strong tenant mix that we currently see in existing megasheds. So this indicates that demand for large facilities is coming from a far wider group of occupiers than pure e-players that are usually associated with this type of buildings. We see more trends and more reasons why large facilities will be in demand going forward. Increasing cross-border online sales and the need to speed up time to market are the most notable. So we expect that more large facilities will be built over the next couple of years. The next point I want to make is the improving quality of logistics assets. Since the start of 2009, in total, over 30 million square meters of new, mostly state-of-the-art facilities have been built across Europe. These buildings include features such as mezzanine floors, dedicated employee areas, higher number of loading doors, and site characteristics such as access to multimodal transport infrastructure. But the improving quality of assets is also leading to concerns that we might see an accelerating obsolescence of existing stock. Well, the positive thing is that what we are seeing in the market is that only a small part of supply chain activities actually require specific bespoke buildings. The major part of occupiers are still able to accommodate the operational needs in existing modern functional buildings. As a result, large parts of the stock that has been built over the last 10, 15 or even 20 years will remain competitive. The fourth point I want to make is also about a concern in the market. Will logistics demand remain as strong as it is at the moment? So how sustainable are today's strong take-up levels? Now, total European logistics take-up has increased 30% to an average of 13.2 million square meters per year in the 5 years to 2013 on the previous 5 years. This increase during a period of difficult economic condition was driven by new distribution models that are more space and labor intensive than the traditional store replenishment, which actually benefits from bulk shipping. So what we're seeing is that the new distribution models at the moment are driving incremental demand, and we expect that in the foreseeable future, take-up levels will be indeed remain on similar high levels than we have seen over the last couple of years. This assumption was actually backed up in our survey. 65% of those polled told us that they expect that by the end of 2016, they will occupy more floor space than today. And this actually leads me to my last point. Logistics network realignment has only just begun. Now, we are going to talk a lot more about e-commerce, but what we've seen in our research is that in the last 3 years, logistics facilities taken up specifically for e-fulfillment made up only a small part of the total take-up. Now, this figure clearly underplays the total amount of e-fulfillment that is taking place today in existing facilities. But these figures, what they are showing us is actually that different countries are still at very different stages in the implementation of large dedicated e-fulfillment activities. And that we are certainly seeing over the next couple of years further alignment. And in fact, this was also, again, backed up in a stray poll that we did during the launch event of our survey earlier this year, where almost 70% of those attending the event told us that, in their opinion, logistic networks are not fit for the future. Now, this is in no means representative, but it is reflecting the opinion of a number of leading experts in the market, and therefore it should be a strong indicator of further significant change that we can expect. So in conclusion, as the shift to everywhere consumption will continue, physical networks will continue to change as well. This should be good news, especially for developers and investors, as it means that current logistics stock in Europe still needs more development to match the demand that we are going to see in the next couple of years. We expect that in the foreseeable future, market fundamentals will remain strong, and that there will be many more interesting opportunities for landlord developers and investors. Thank you.